In today's show, I'm going to be sharing with you the 3 reasons why the Bitcoin price bottom is not in. And Scaramucci from Skybridge Capital, he believes Bitcoin will reach $300,000 soon. Now check this out, Bitcoin holding steady under 10 cents 12 years ago, which you can see here in this chart. And now for a fun fact, 10 years ago today, Bitcoin was trading at $9.55. Also in today's show, Analyst, who nailed the May 2021 Bitcoin crash, says Bitcoin looks bullish with plenty of wiggle room despite the recent pullback. Quoting Dave the Wave, on this recent 42% move up, Bitcoin has only come off the first Fibonacci level, looking good, plenty of wiggle room while staying bullish. On the macro, and quoting Smart Contractor, my God, that was fast. Probably not interested in buying any Bitcoin until it makes a new low below $17,000 now. Also in today's show, macro guru Raoul Pal details a very bullish outlook on Ethereum and the crypto markets as the merge approaches. That's right, the Real Vision founder says that the markets take the path of most pain, and for ETH right now, that means upwards. Also in today's show, one indicator is likely to determine whether Bitcoin stays in a bear market, says crypto analyst Benjamin Cohen, and he's referring to the US dollar currency index, quoting him here. Now, a lot of times when you see the dollar going up, it's sort of like a wrecking ball. It makes most other things go down. Generally, you could view it as people fleeing into the relative safety of the US dollar. Also in today's show, I'm going to be sharing a very bullish price prediction of Bitcoin hitting $937,000 by 2030. That's right, according to the crypto exchange Changelly, Bitcoin might peak at around $937,000 by 2030, with the crypto trading at an average price of $798,000. We'll also be taking a look at the overall crypto market, all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. I also do a $50 Bitcoin giveaway every day, and we're switching it up starting today. Instead of a random comment being selected from a random comment generator and spammers taking advantage of this giveaway, I'm selecting a hand-selected winner, and in this case, Brett Hallman. Congrats, you just won $50 in BTC. He commented the following: thanks Crypto News Alerts, got the feature yesterday, told my family to start listening in daily with the True Crypto fam. Of course, I mentioned the giveaway also, knew they would like that. Congrats fam, you are the hand-selected winner for today's $50 Bitcoin giveaway. Please post your Bitcoin address on your channel About section so I can send it to you. Cheers. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel. Will Smith, that like button, and drop a comment below, and I will read them all and hand select a winner on tomorrow's episode. I wish you the best of luck. All right, welcome back to another episode of Crypto News Alerts. This is podcast episode number 1024, and I'm your host, JV. Now, Bitcoin recovered modestly on August 20th, but remained on course to log its worst weekly performance in the last 2 months. And checking out the Bitcoin daily chart, you can see we climbed 2.5% to 21,400 per token, but was still down nearly 14.5%. Week to date, its worst weekly returns since mid-August. But nonetheless, some on-chain indicators suggest that Bitcoin's correction phase could be coming to an end. That includes the hash ribbons, a metric that tracks Bitcoin's hash rate to determine whether miners are in accumulation or capitulation mode. And as of August 20th, which you can see here, the metric is showing that the miner's capitulation is over for the first time since August 2021, which could result in the price momentum switching from negative to positive. Let's freaking go. But nonetheless, Bitcoin has been unable to shrug off a flurry of prevailing negative indicators, ranging from negative technical setups to its continued exposure to macro risks. Therefore, despite optimistic on-chain metrics, a bearish continuation cannot be ruled out. So here are the 3 reasons why Bitcoin's market bottom may not yet be in, starting with number 1, the Bitcoin price rising wedge breaks down. That's right, Bitcoin's price decline this week has triggered a rising wedge breakdown, suggesting more losses for the crypto in the coming weeks. Rising wedges are bearish reversal patterns that form after the price rises inside a contracting ascending channel, but resolve after the price breaks out of it to the downside, which could result in a drop to the low as the maximum wedge's height, which you can see here in this chart. Applying to the technical principles of this Bitcoin chart, it shows 17,600 as the rising wedge breakdown target. And in other words, the Bitcoin price can fall by approximately 25% by September. Now, for the second reason, the Bitcoin bulls are misjudging the Fed. That's right, Bitcoin has surged by approximately 45% during the rising wedge formation after bottoming out locally at around 17,500 in June, which is the low so far for this cycle. And interestingly, the period of Bitcoin's upside moves coincided with investors' growing expectations that inflation has peaked and that the Federal Reserve would start cutting interest rates as soon as March 2023. Now, the expectations emerged from the Fed Chairman Jerome Powell's FOMC statement from July 27th, quoting him here, as the stance of the monetary policy tightens further, it'll likely become appropriate to slow the pace of increase while we assess how our cumulative policy adjustments are affecting the economy and inflation. But nonetheless, the most recent Fed dot plot shows that most officials anticipate the rate to reach 3.75% by the end of 2023 before sliding back down to 3.4% in 2024. Therefore, the prospects of rate cuts remain speculative. Now, the St. Louis Fed President James Bullard also noted that he would support a third consecutive 75 basis point raise at the central bank's policy meeting in September. The statement falls in line with the Fed's commitment to bring inflation down to 2% from its current 8.5% level. Best of luck to the Fed. In other words, Bitcoin and other risk-on assets, which fell into a bear market territory when the Fed began an aggressive tightening cycle in March, should remain under pressure for the next few years. Now for the third and final factor, if history is any indicator, the ongoing Bitcoin price recovery risks turning into a false bullish signal given the asset's similar rebounds during the previous bear markets. The Bitcoin price rebounded by nearly 100% from around $6,000 to over $11,500 during the 2018 bear market cycle, only to wipe off the gains entirely and drop towards $3,200. And notably, similar rebounds and corrections also took place in 2019 and 2022, which you can see here in this chart. And Skybridge Capital CEO Anthony Scaramucci believes Bitcoin will reach $300,000 soon. Send it, and check this out. Bitcoin holding steady under 10 cents 12 years ago, which you can see here in this chart. And exactly 10 years ago today, Bitcoin was trading at $9.55. And before I break down next story of the day, Analyst, who nailed the May 2021 Bitcoin crash, says Bitcoin looks bullish with plenty of wiggle room despite the recent pullback. But first, let's take a quick look at the overall crypto market. You can see Bitcoin and many of the major cryptos are currently pumping. Back in the green, we got Bitcoin up 2.5% for the day, trading above $21,500. We have Ether up almost 4%, trading above $1,600. Binance Coin, Avalanche, Solana, Polkadot, XRP, and Cardano all breaking out and pumping. But all right, now let's break down our next story of the day. The crypto strategist, who accurately called Bitcoin's 2021 collapse, says Bitcoin remains bullish despite correcting over 15% in the past week. The synonymous analyst known in the industry as Dave the Wave tells his 124,000 Twitter followers that Bitcoin may be mirroring its 2018 bottom, where it printed an ascending triangle pattern to crawl out of the bear market. As he shares here on Crypto Twitter, on this recent 42% move up, Bitcoin has only come off the first Fibonacci level, looking good. So according to the crypto analyst, Bitcoin continues to respect key Fibonacci retracement levels amid the pullback, as he shares here, currently a 50% retracement of the recent move up and a 38% retracement of the macro. And although Dave the Wave says Bitcoin still looks bullish, fellow crypto analyst Smart Contractor does not share the same sentiment. The crypto strategist, who accurately predicted the 2018 bear market bottom for Bitcoin, believes Bitcoin is poised to print a new cycle low. Quoting Smart Contractor here, aka Blunts, "My God, that was fast. Probably not interested in buying any Bitcoin until it makes a new low below $17,000 now. That chart is ugly as hell." And he also shared here, "Not sure why this count on Bitcoin didn't come to me sooner, probably because the structure wasn't formed yet, but it does look like this rise from the lows on Bitcoin can still be an ABC with a C as an ending diagonal. Obviously, this isn't ideal and would indicate a new low on the horizon." And also quoting Dave the Wave here, "You can measure the fractal with a real Fibonacci or just use the comparative angle. Plenty of wiggle room while staying bullish on the macro." And before I break down next story of the day, macro guru Raoul Pal details very bullish outlook on Ethereum and crypto markets as the merge approaches. But first, let's take a quick look at the overall crypto market cap, sitting above that $1 trillion milestone with $61 billion in volume in the past 24 hours. The current Bitcoin dominance is 40% even, with the Ether dominance at 19.3%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Lido DAO leading the pack, up 22.2%, trading at $2.25. Followed by Quant, up 11%, trading at $113, followed by EOS, up 8%, trading at $1.52. And checking out the top 100 cryptocurrency gainers for the past week, you can still see the altcoins in a sea of red with heavy corrections, with EOS one of the few in the green, up 17.2% for the week. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated at 27 out of 100 in fear. Yesterday at 29, last week a 47 neutral, and last month a 33 in fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down the next story of the day. Former Goldman Sachs executive Raoul Pal says he is very bullish on Ethereum and the crypto markets despite the uncertain price action unfolding in the recent months. In a new interview with crypto analyst Scott Melker, Pal says that the crypto hedge funds who took the big losses during the recent market turmoil are underweight ETH as the merge, Ethereum's transition to a proof-of-stake consensus mechanism, approaches. The Real Vision founder says that the markets take the path of the most pain, and for ETH right now, that means upwards. Quoting him here, I think everybody's underweight the merge still. People will get into the merge or post-merge, will get this spike, and will probably get a pullback. A lot of people will say, see, it's going back to the low. My guess is it corrects sideways, does something, goes back into the range for a bit, and then we explode higher. So I am very bullish right now. Short term, we're getting close to overbought, but I think we just had a correction, and my guess is we go again. What's fascinating is to see the forwards market and the futures markets is everybody's hedging ETH merge risk, so that buying ETH and selling futures now, somebody's going to lift that hedge off at some point. I find that setup really interesting, and I know that crypto hedge funds are all underweight because they all got beaten up so badly. They've been buying calls as a way of having something over the merge, so don't be beaten up by their investors. So when you see that kind of setup, the path of pain is still higher. So there you have it. The macro guru says crypto's relative underperformance this year can be attributed to the unexpected tightening in central bank liquidity, which he had previously predicted will change. Quoting him here, from my perspective, I think the macro is the big thing that actually caught most of us by surprise. Not that the macro caught us by surprise, but the impact it has on crypto. Firstly, when you have negative real wages, people have less money to dollar cost average. It's still a retail investment market. So then the other thing is central bank liquidity being withdrawn. And if you look at the year-on-year charts of M2 against Bitcoin, they are basically the same thing. It tells you that as money is coming out of the system, there's less money around. And to watch this entire interview he did entitled Crypto Contagion Over, Can the Ethereum Merge Still Spark a New Bull Market? Check the show notes below the video in the description. And before I break down our final story of the day, one indicator is likely to determine whether Bitcoin stays in a bear market, says crypto analyst Benjamin Cohen, as well as I share with you this very bullish $937,000 Bitcoin price prediction by 2030. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, make sure you're subscribed to the channel. Will Smith, that like button, and drop a comment below, and a comment will be hand selected by yours truly in tomorrow's episode. And of course, I wish you the best of luck. You can also follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play, and all across social media from crypto Twitter, Facebook, Telegram, Instagram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. Popular crypto analyst Benjamin Cohen thinks one indicator is likely to determine whether Bitcoin stays in a bear market. In a new strategy session, Cohen tells his 764,000 YouTube subs that Bitcoin has historically been inversely correlated with the US dollar currency index, better known as the DXY. The DXY measures the value of the dollar against a basket of 6 foreign currencies. Quoting him here, now a lot of times when you see the dollar is going up, it's sort of like a wrecking ball. It makes most other things go down. Generally, you can view it as people fleeing into the relative safety of the US dollar. Cohen says that the dollar index has been in a general macro uptrend since 2008, and he notes that Bitcoin bear markets have tended to correlate with the dollar's index's sharp moves to the upside, and vice versa. As he shares here, the general relationship, as we've discussed, is that as long as the dollar is going up, we would expect Bitcoin to more or less stay either in a bear market or the very early stages of its accumulation phase, which you can see here in this chart. Let me know if you agree or disagree with the crypto analyst. And now for the moment you've all been waiting for, this bullish price prediction of Bitcoin hitting $937,000 by 2030. Let's discuss it. So let's start here with the crypto exchange Changelly. They predict Bitcoin's average trading price will be as high as $124,000 by 2025, with the platform claiming it might go as high as $137,000. Now for an interesting fact, Bitcoin searches on Google are 7x and 42x higher than the number of searches for the US dollar and the euro, and this trend will only likely to continue. So let's fast forward to 2030. So for starters, one thing must be made clear. Obviously 2025 and 2030 are 5 years years apart and an entire crypto cycle apart. But do keep in mind that this doesn't account for potential black swan events. According to crypto exchange Changelly, they say Bitcoin might peak at around $937,000 in 2030, with the crypto trading at an average price of $798,000. Send it. Now, what drives these projections? Well, a couple of reasons. For starters, most are optimistic about the value of the crypto scarcity coming into play. And secondly, maximalists envision a future where demand for Bitcoin is endless. And finally, with the Bitcoin adoption rising by 113% annually, many believe the same will one day be highlighted by Bitcoin's price. And there are other projections as well. One's even more bullish. According to Parallax Digital's Robert Breedlove, for instance, Bitcoin will hit $12.5 million by 2031. Now let's fast forward to the year 2040, 18 years away. Needless to say, projecting a price level for 2040 is obviously the most difficult, but according to Telegon, Bitcoin will enjoy an average trading price of $553,000, depending upon the market trend by 2040. It went on to predict the following: our maximum price prediction for Bitcoin is $618,512.87 in 2040. If the market gets bullish, Bitcoin may surge more than our Bitcoin price forecast in 2040. So there you have it. What are your personal price predictions for the King Crypto in the year 2025, 2030, and 2040? Let me know in the comments right down below. And now for a quick recap, what I covered with you here in today's show. I shared the 3 reasons why the Bitcoin price bottom is not in, as well as the analyst who nailed the May 2021 Bitcoin crash says Bitcoin looks bullish with plenty of wiggle room despite the recent pullback, as well as macro guru Raoul Pal details a very bullish outlook on Ethereum and the crypto markets as the merge approaches. I also shared one indicator likely to determine whether Bitcoin stays in a bear market, according to crypto analyst Benjamin Cohen. And I also shared with you some very bullish Bitcoin price predictions for the future. Where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. eCoin wrote, Aloha JV, enjoying this weekend so far. I'm going to take a break from the charts. We all need breaks here and there and should take my time to enjoy stuff. But don't get me wrong, I still catch crypto news alerts on the daily. Hodl, greatly appreciate your continued support, fam. One love. Our next featured comment comes from Ocean KO. ETH dropped below $1,600, buddy. Let's see if it bounces again to $2,000. All I gotta say, BTFD, buy that freaking dip. And our third and final featured comment comes from Matt Kabitz, who wrote, I don't care how far down Bitcoin drops. I just dollar cost average and hodl with my diamond hands. Whales and hedges will not get my sats. Preach, fam. And to be featured on tomorrow's episode, drop a comment below. And also to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you subscribe to the channel, Will Smith that like button, and drop a comment below. And I will hand select a winner on tomorrow's episode. Best of luck, and I look forward to seeing you on tomorrow's show. Peace.